Hello, traders. Good morning. Broadcasting live from Mexico City. Here is 8 a.m. in the morning, 13 hours GMT time. First of all, I'd like to point out something that maybe it's kind of urgent. The last session, last week, I recommended opening a trade to the upside on Euro GBP, but according to the latest price action, it's imminent uh, that we close that trade in profit. I'm going to show you why, but for the ones that decided to go with along with me in that trade, it should be a good idea just to close it. Well, as you can see here, I have my account where I am opening all the trades that I will be broadcasting in the webinar. So as you can see here now, we have this trade in profit. Here is a clearer view of it. As you can see here, we open it just at the bottom of this swing trade, of this swing move, but we are now closing it at market. That's it. As you saw, that trade was closed in profit. It was not that outstanding profit, but the thing of being a trader is that you know what and start recognizing where the risk starts going against you, and then just decide to hedge your trade or just to close it. Fortunately, binary.com offers us the possibility of selling it at market, and in this case, it was a profitable move. But unfortunately, the price of oil zero point 0.8 was barely touched today, and that affected the overall next performance of that. I'm going to analyze that in depth in the next minute. So let's go back to the presentation. Okay, sorry for that urgent call, but it was really important. Actually, I was really kind of stressed because the latest analysis that I did some minutes ago threw me that a possible outcome that the Euro GBP could retrace at least at the levels where we open it. It was 1 week ago. We projected this trade for the next 3 weeks, but the movement was almost immediate, as you could see when we opened the trade, and we touched the zero point 0.8. So after that, we will have to reassess what to do, and we will go in depth in the next minutes. So now, from the very beginning, my name is Alberto Alvarado, and as I just explained, I'm broadcasting from Mexico City, and I would like to offer you I'm really, really sorry. I don't know what is happening now in the airport in Mexico City. I live close to the airport, but apparently the whole air traffic, for some reason, is passing just above my house at this moment. I don't know what happened in the airport, so you could hear the airplanes. Hopefully that won't disturb us. So, WoW trades, why WoW trades? Week over week trades. We are opening trades, reviewing them in a weekly basis, and so you can check them out and add up the things that you learn here into your trading skills. A little bit about me. Well, as you can see, I'm from Mexico City. I started trading my a live account at 2005 with an inherited money. I lost it all in less than 1 week. So that showed me that I was not ready. I started developing my personal approach at that moment, and more or less at 2007, I started harvesting the results of my approach, just to see my account evaporate again at the 2008 crisis. So I had to start all over from scratch, and adding up what I call the subjective creative approach to the markets. Usually when you start trading, you will be misled by a lot of forums trying to sell you the idea that trading is about converting technical analysis into a science. That's a lost dead end. That won't happen. technical analysis, that is the name, it says it all. It's a technique, not a science. So I realized that, and I decided to give it a try to adding up the intuition and subjective approach to my trading, and I found it to work for me. So the things that you will be seeing here is how I understand markets, how I dare to add up those subjective approaches, and at the end, well, in my case, that helped me become profitable. And well, maybe this could inspire you just to develop your own vision on the markets. Value-added services, well, depending on the demand here during the webinars and after the webinars, and when you realize the quality of the information that is being released here, of course, I would be more than willing to offer some other value-added services like personalized coaching, more in-depth analysis, etc. But we just have to let time go and see how things go. And overall, if you like the webinars, continue coming back. And by popular demand, I could open some value-added services. Okay, today's agenda. First of all, previous week's fundamental highlights. We're going to talk about the last Friday's Canadian employment change. That, by the way, was outstanding. Second, price action opportunities derived from that. We have a good potential trading opportunity in the Canadian dollar. The live trades, the review and adjustment of previous week trades, the thing that we just did at this moment, because I really didn't want to wait more because a support line was starting to be broken. So we could have a retracement in our favor, but if that price started to drop, it would simply evaporate the trade and convert into maybe a break-even trade or a losing one. So that's not the idea. Unfortunately, while we will be reviewing the trades week on week, of course, we won't have that exact timing. So we have to learn how to improvise this. So, well, for the ones that are just attending now, if you decided to go along with me, the last week trade recommendation on Euro GBP bullish trade at this moment should be profitable at profit, and just sell it at market, because the probabilities of having a retracement after touching the 0.8 level are higher now. And of course, at the end, questions and answer section. By the way, for the ones that feel like sharing your information, I would be really happy to know where you are visiting us from, just to have an idea where you are, where traders are. And well, I'm starting for me. I'm from Mexico City, broadcasting from Mexico City. And well, if somebody wants to share the information, be my guest. As you can see here, the previous week fundamental highlight by far was the Canadian employment change. The chart that you can see at this moment, it was released Friday, June the 10th. So it's almost 1 week ago. It was one day after we decided to open that euro pound trade. And as you can see here, just a little bit of explanation. The blue bar is the actual number, and this like golden yellow thing was the forecasted number. So as you can see, the deviation was huge. This was a really, really good number of employment change for the Canadian economy. This was really positive for the Canadian for the Canadian economy. I was commenting elsewhere with some fellow traders that this couldn't happen if the American economy was not recovering. In fact, actually, what you are seeing now in the Canadian economy, that it's being reflected in this Canadian employment change, is a direct consequence of the United States economy really doing good. And I know that there are a lot of American traders, American citizens that believe that the American economy is not doing well because they are not living in the same fashion that they used to live before 2008. But that won't ever that won't ever happen again. People in the United States now, more and more, they are in the need of grabbing more than one job to have a decent quality of life. So this so-called full employment, some analysts are saying that the American economy is more due to the fact that there are people having more than one job because in fact they have unemployed people in the United States. But the most part of employment is already in use. That is because more than one person is working more than one job. We commented something last week on the non-farm payroll number being hugely deviated against the, but the markets really didn't react in that way. Actually, the what happened after the release of the non-farm payroll number was a huge volatility, but on low volume, because the markets are starting to realize that the non-farm payroll number gradually is starting to lose importance, the importance that it had for the latest 10 years, maybe. Okay. From now on, what we are going to see is more consumer-related indicators being considered way more than the non-farm payroll number. Why? This is the first indirect evidence. Look at this huge number in employment change in Canada. And there's only one explanation for this, that the American economy is consuming what the Canadian economy is sending to the United States. Okay. We're going this kind of numbers really generate a lot of what I call fundamental trading opportunities. That is not the same as news trading. News trading is only yes, it's like guessing what the number will be and how the price reacted for previous data releases. But when you trade the fundamentals, you're not betting for the next maybe 10 minutes after the news release. You're really trying to see the whole picture. In this case, you have to add up into your analysis the non-farm payroll number reality, how the markets reacted after the non-farm payroll. Then, if this, in this case, the Canadian employment change had something to do with that non-farm payroll number, that if it's in tandem with how the price behaved at that time, etc., etc. I know that for the beginners, maybe this is like, oh my God, we have to take all that into consideration. The answer is yes. So this is why this takes time and practice, because at some moment it's the loads of information that you need to analyze is huge. But with a little bit of luck, what I do here is trying to show you how to accurately start doing your analysis. It's not only about technical analysis. It's not only about having your edge. It's also knowing what's happening in the world and how to say it, how incongruent every data is along with others. In this case, how could you explain that the Canadian economy that depends 50% on the American economy simply showed favorably this employment change, so favorably to Canada when 1 week ago, 1 week before, we had a terribly deviated negative number, non-farm payroll number? The answer is that non-farm payroll number is reaching its limits to indicate accurately the reality of the American economy. Okay, here it is. For the ones that are wondering what you're seeing here, let's imagine that this blue thing, it is like a Bollinger Band, but instead of being based on price, it's based on fundamentals. So what you're seeing here is a median line, and here are the extremes, and you can read this as any normal Bollinger Band. In this case, if you remember the last slide, you see that what was expected is to have a number below, really below this median line. That would gradually start, if we continue having numbers below this median line, could mean that in the future, the more likely is that we will start receiving even less and even in negative territory. But this is the huge importance of this Canadian number. Making the analysis of the latest year Even the analysts were expecting a really bad, well, or yes, really bad data because having barely adding up some very few people to the working force in an economy is not good. So this is to try to put in context how important this news was and how this news is in fact reflecting indirectly that the United States is going in the right direction and that yes, the Fed rate hike is imminent, even though yesterday we had the FOMC meetings, Yellen accepting that maybe the American economy is not that good in the export side, etc., etc. But the thing is that in the overall long-term view, the American economy is in the right track, and that is helping the Canadian economy, of course. So this is why I chose this the dollar Canadian that is called loonie as a trading opportunity because the implications of having this number so outstanding that even closed and the number is above the median line of this fundamental Bollinger Band is huge. Okay, here it is, the dollar Canadian analysis. This is more or less the same thing. This is the Bollinger Band, but adding up different fundamental things, not the price section, just to have an idea where we're standing up. And I will explain why the short trading opportunity that I am considering in the United States dollar, Canadian dollar, is the way to go for this trade this week. Well, as you can see, if I choose different dates that I consider they are relevant in price action to have this fundamental Bollinger Band. And as you can see here, we have the median line at 1.3. Okay. As you can see, the price respects the upper and lower bands, and this is the median line is telling us in this case that apparently it's starting to moving up. Here's the same thing. We have a shorter time frame, but again, you see the median line at 1.3. Here's a shorter time frame, and it's pointing completely down. And this is the important thing. I made this slide one day ago, and the recent price action, uh, as you can see here, the price in the loonie now is more than 1.3. It's 1.3. 020 or something like that. We're going to review that. But as you can see here, the price is just above this band. So it's closing or it's moving above that superior um, Bollinger fundamental band. And usually that when that happens, you can expect a movement to the downside because for the same reasons from the Bollinger band, those bands are like the extremes of the likely expected movements. And well, this is the even shorter time frames that maybe are not that relevant. And I don't know if you can hear the airplane now at this moment, but it's really annoying. I don't know what happened at the airport. Okay, as you can see here in shorter time frames, this is pointing down, and again, here is a 1.3, as you can see just above. So the chances of having the price here and then retracing back are really high. Overall, because at some point, if the Canadian economy is being able to mimic what the American economy is doing, what you can expect is that in the long term, the Canadian Central Bank will be the next one hiking the rates in the same fashion than the Fed or even more, making it more attractive like the way it was before 2008. So in the long term, this could be a really profitable trade to the downside, meaning a bullish trade on Canadian dollar. Well, this is even shorter time frames that you can see here, the 1.3. This is irrelevant, just for the records, I put it here. Okay, here's the United States dollar Canadian analysis. Why I chose this and why I believe this is the way to go now. We have two triangles important triangle. This is the daily chart. We have this line and this line. We have this line and this line. There are two triangles there. The idea is that the price is more or less here, where the red dot is now. This is the 1.3. But the idea is this: the price, what I was expecting to do is to approach to this resistance line, maybe trying to break it. But since we're facing the 1.3 level, psychological level, we know that at those prices we can expect a big profit taking or shorting, people shorting at psychological levels. Besides, we just saw in the charts and the slides that I just showed to you that the 1.3 is not only a psychological level, but we have a fundamental value on those Bollinger Bands, fundamental Bollinger Bands there. So we have very good chance of shorting here to have a profitable trade to the downside. And the idea is that, for example, opening a trade here, you can see clearly where the stop loss is, or where the level that would simply rule out and deny this trade to the downside is this line. So as you can see, it's like 100 pips. The fabulous thing of trading binary.com is that you don't need to worry about that. The thing is that you need to enter the right direction. If you try to open this in another in a traditional forex platform, you should consider a lot of factors: position sizing, risks, volatility against you, etc. But with binary.com, the thing that you do is just choose the direction. No matter if the price goes against you, it doesn't matter if it goes 5 pips, 100, 1,000 pips. You know exactly your risk, no matter what happens. So that is why this is a terrific and good opportunity to trade to the downside in this case. And well, this is only for the record that we just did at the beginning of the webinars, closing the Euro GBP trade at profit. When we open it, it was because we detected a very clear breakout of this support, of this resistance that became support at this level. And we opened the trade more or less here, and it went straight up. But as you can see, the 0.8 psychological level, it was barely hit this last day. Today we had the retest of this almost the 0.8. So I started making a closer analysis in price action, and it indicated me that the chances of having the price being retraced here were higher than I expected at this moment. That is why I recommend you all, if you decided to open it to the upside, just to close it. That doesn't mean that in the long term, in the next 2 weeks, this won't continue going up. But the thing is that this trade was profitable almost at the very beginning, and it moved really quickly, way quicker than I expected in our favor. And that also affects how you manage a trade. Well, let's go to the live analysis. Well, as you can see here, this is a 1 hour chart. This is the Euro GBP. I just want you to draw your attention here. The price broke the support line. The price retested the lower Bollinger Band. This is the 1 hour chart. As you can see, we've been having a very good movement to the upside. We opened the trade, if I'm not wrong, at these levels. It was almost here. As you can see, we had a movement to the upside almost immediately. We had this movement then down, and it continued going up. But this is what alerted me to close it. We had this this thing breaking to the downside, and look at this. The price recognized that breakout, and at the moment it retested this resistance line that was previously a support, the price started dropping. It's starting to drop. In in the conditions of volatility that we can see now because of still this Brexit uncertainty, I wouldn't wait more. And as you can see here, the point 0.8 was barely the price approached very close to that psychological level. And you know that at times the markets uh, could make an obvious uh, even if the price doesn't touch a psychological level, if it gets close enough, the markets could simply discard it and take it as it touched it. And the thing, it's we had a double top here. We have this retest, this high, and the retest. So I'm not waiting anymore for this trade to continue going up. It could continue going up, but after watching this, then you know why I just broadcasted to close the trade in profit. So I think that's pretty much for this trade. It was a very good one, as you can see, since we opened it, it went in our favor immediately. Why? Because what I do is to consider all the facts, not only the technical ones, but put them into context in the fundamental world. That is why this trade started going right immediately after in our favor. Let's move to the United States dollar, Canadian dollar, to see how it looks. Well, as you can see here, this is the line that I was showing up in the slides. This is the breakout. And this black line is what I call the stop loss line. This zone is the one that is opening the opportunity of opening a short trade here. As you can see, we are now at 1.3022. And this line is at 1.31. It was more or less a 100 pip, let's say, stop loss. In any case, that we are right. We're having this trend line being broken after that facing a psychological level. With all the implications of those slides where I showed you those fundamental Bollinger Bands signaling that this price is in fact a strong resistance. So this is a no-brainer. I mean, if somebody wants to long this thing at this moment, you can do that. But the things that you're going against the possibilities. It can go up, but because of the conditions, the risk reward and the current analysis of the market, the way to go is to the downside. Okay, so what we're going to do is to try to detect the time span. We just decided the direction based on fundamentals, based on price action, and even on technicals. Look at the one at the daily chart. The MACD is below zero. It's not that big deal. It's just very close to the zero line. But it's below zero. So this is another add up to our bearish bias. Let's move to the 4 hour just to see how this looks like. Well, here it's clear, the 1.3. We're just there. On the 1 hour chart. As you can see, we've been having bullish momentum for the latest, week after this good data for the Canadian economy. And this usually happens. Why? Because for something being a good opportunity to short, you firstly need it to go up, allowing people to start opening short positions. So after having that good news on the Canadian economy, as you can see here, this is the candle. This is how the price reacted after having that very good Canadian number. It initially reacted to the downside, retesting this low. How I understand what the market did after that data is giving the chance for the bears to short and to short and to short. Why? Look at this. You see? The higher it gets, the more volume it faces. Adding up everything, the fundamental things, etc., that we just mentioned, the way to go is to short at this level. This is like a perfect trade. The only thing that we will have to do is to detect a good time span. This is going to be really quick. Okay, what we're going to do, since the the Fibonacci time expansion is not really telling me anything, what we're going to do is to program the trade to close at this, where these two trend lines, this triangle, this is a clear triangle, as you can see. This closes at July 9th. So that's the day we're going to open the trade. I mean the expiration. July 9, we go here, Canadian dollar, end time, July 9, that is Saturday. So we're going to put that on Friday the 8th. You here select, well, the risk that you are willing to run, etc. This is the money management. That's a very personal thing that I will go and explain with more time in other webinars how to match that with the trading approach that I have. But in this case, it's only representative. Canadian dollar, up and down, rise and fall, starting now, ending time, July 8th, payout, you choose the one that you like, and you choose lower and purchase. You have the confirmation here. You can review it. At this very moment, the trade is moving to the upside, but well, this trade is not intended to be profitable at the very second. But the thing is that we just shorted it at a psychological level. So the possibilities of having this correct are huge. We can have it wrong, but opening and you as a bottom line, as a and maybe the last thing that I will say in this webinar is you short at resistances. You don't open long trades at resistances. And a resistance of the kind of the 1.3 with all the implications I just explained, it's suicidal to open a long trade at these levels. You short at resistances, and we're facing a resistance now, we short it. It's like a trading 101. Now questions and answers, Shadis. If you have some question and answers there, sorry, some questions. Okay, apparently no questions here. Okay, great. Well, for the ones that are interested in having questions, feel free in the next webinar if you decide to have or you have a question. You can drop it at the very beginning of the webinar. The next time that we meet, that is the next week, and I will be more than glad to answer it and to help you with your personal questions. So thank you very much for showing up for the webinar. Remember, we will see, I will be broadcasting next week. I believe it's not going to be on Thursday, but on Wednesday. But of course, chat is going to send you an email reminding you that the exact date of this webinar next week. So thank you very much, everybody, for showing up. Trade safe, be safe, and bye bye.